Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name is Doc Severson. I'm joined by Dave Lukas over here. And today is Monday, the 25th of November. As we get into a shortened holiday week, we're going to have Monday, Tuesday, Wednesday, and half a day on Friday. And so this is traditionally a positive week. We'll see if today is just a beginning into chop or whether we do actually break out above 6,000 on the S&P. However, as Dave was telling me here a minute ago, it's like that's not the only market that's moving today.
That's true. The Russell is up. I think it was up almost 60 points at one point in time. I think it's up maybe somewhere in the 40s or 50s now, but the Russell's been leading the way. We talked a little bit about this last week. I think we are seeing rotation out of tech. Tech's down today. I think we're seeing that rotation out of tech into the Russell and broadening the market. The Russell is the chart to catch up the most to this market. We've had new highs put in over and over and over again on the S&P and the NASDAQ, and we just are getting to the previous high before the bear on the Russell. So the Russell, out of all the markets, has a ton of room to run if it wants to catch up to the overall market right now. So that's a big thing. But across the board, we've been talking about it. We've been talking about how we figured we would run up. We run up after the election. We went too far over our skis. We pulled back. We pulled back right to that 50% fib retracement, right to the moving averages that I look at, like in the middle of Bollinger Bands. Found support there, have bounced back up off of there. We now have fully charged daily charts. We've got pretty much fully charged weekly charts. They look like they're starting to release higher, and that sets up well for the end of the year run that we have been predicting for a couple months now and expecting. So, and it's not just based on I want that to happen or opinion like that. It's just what the price is showing us and telling us, and frankly, seasonality, right? So, we typically see that end of the year run here. So we made it through all the hard stuff, right? Unless we get a nuclear war, then all bets are off, right? At this point. But we've made it through all the really the big market moving events and everything, right? And so now it can be smooth sailing for these markets into the end of the year if they want to take it.
Now, do we have some worry that the market can climb? Because typically when we have markets where everything is good, that often marks the top. So if we have everything kind of like, what I'm looking for and what I'm used to is like a market that everybody hates and can't believe that's going higher. And we don't really have that right now, other than the fact that we've got a lot of people saying the market's expensive. But apart from that, nobody's really hating on this market yet.
Yeah, PE is way too high historically, all that stuff people are saying. So, it will a lot of times go up despite that, right? All the naysayers, it'll do that. The other thing is it could happen. What was it? What year was it? You'll know this. A few years back, we had a good run up. It was like a market like this, and we got in December, and it just puked. It fell apart. What year was that? Was that 2018?
That was the end of 2018, and that's because Jerome Powell was, hey, I got to raise rates. Everything is too good.
Right, and we don't have that currently. So, I'm just trying to think of a market that resembles that. What could happen to make it go down in December? And I'm just not seeing those signs.
Well, we've already had, 2 weeks ago, we already had on that Thursday, a couple of weeks ago, we already had Powell, who was unexpectedly said, hey, we don't have to rush to cut rates. And that was his way of signaling like, oh boy, here comes inflation again. I'm not sure if it's smart to cut rates in December. So that was his way out of that, and the market didn't particularly handle that well. But we've gotten all of that back ever since we lost that. So I'm wondering.
There's a 56% chance.
It's a coin flip right now, and we're going to find out more on Wednesday when we get PCE. How's the PCE? And it comes in at an odd time too. It comes in at 10 o'clock in the morning.
I know that is an odd time. It's not pre-market.
All right. So that's going to come along. Obviously, any trades that I do on Wednesday are going to have to wait for that to be released.
Exactly.
So there's that. And of course, as we get into December, which is, holy smokes, that's going to be next week.
Next week.
We're going to get our jobs report. And then
Mm-hmm.
shortly after that, we're going to get CPI, PPI. So we'll have the full, magazine of information to determine the probabilities of. And that's the one thing I would say is that this Fed and Jerome Powell has done a pretty good job of really sort of tipping the market off in terms of what he's going to do. I cannot remember the last time that the market was really, really surprised by something that he did. Sometimes he'll say some offhanded remarks that'll somewhat tip the market, but he's done an awfully good job of just like, hey guys, this is what we're going to do.
Mm-hmm.
So, and that's been good, because the opposite of that was the Greenspan years where, the term Fed speak came from.
Yep.
Where nobody could figure out what he just said, and everybody was clueless about the actions for that.
Well, you remember that, like Greenspan, like the conference, there was no real press conference of any,
No.
He didn't do any of that stuff. It just, the decision came out and then he was like, okay, see you later. I'm going back to the Fed. There really wasn't a lot of that.
Yeah, it was like, the smoke would come out of the chimney in the market square, and then people would sort of know the decision, but nobody could figure out, and everybody was parsing between the lines. It was crazy. I mean, that's the one thing I would say is, like, even going back 20 years, just in my tenure, the Fed meetings used to have tremendous volatility around them. I mean, we'd have 3%, 4% days based on something that was in the Fed, like, either good or bad, one way or the other. And the other thing that they used to do as well, too, was they would wait until Friday morning of a monthly options expiration so that the option had already stopped trading, and everybody was like, oh, I'm going to be out of the money. I'm good to go. Right. And then Bernanke, in this case, would actually schedule a press conference saying, hey, emergency rate cut.
Right.
And completely, he was on a mission to bake the bears. He could not stand the bears. And that completely blew out everybody that was holding a short option position above the money.
Yeah, much different world today.
And we just don't see that now for a lot of different reasons. First of all, nobody trades those monthlies anymore.
Right.
And I think Powell does a much better job of being transparent with things. There's fewer games that we have with this. Mm-hmm. The opposite side, or the counter side to that, is that we have a hell of a lot more Fed speak. We've got all these little lieutenants running around, and you watch this week is not bad, but next week, as we get into December, they're going to have very little runway before they go into quiet period. You're going to hear them chirping like a bunch of canaries next week, about rates and about where things are going. Like, Neo Kashkari has gotten to be the kind of the touchstone for some of that stuff, because it's like one day he'll say one thing and then the next day it's something completely opposite. But yeah, that's the con side, is all the Fed speak out there.
In the interim, in the backdrop of all that, though, we should jump in the charts, because the daily charts, the weekly charts are charged up. They're releasing. The Russell a lot of times is the canary in the coal mine. It's the leader, right? It goes ahead either way. And so I think that's kind of the signal that we're getting from the Russell, is that we are heading, higher overall. It's just leading the way some. I think the Russell, it'll probably get petered out a little bit here soon. We may pause a little bit on it, especially after a day like today. But I just think there is, it's a solid sign to see that. And you and I looked at this last week, and we were talking about it even Friday. Like, how far could this thing go if it wanted to go higher? It's massive. That massive kind of U shape there, cup with handle, if you will, right? How far can that thing go?
Well, the measured move is 800 points deep. And so if you take 2,400 plus 800 points, you've got your answer. So it's 3,200 would be the top target. Now, a lot of people will say, well, how long will it take to get up there? And I would say, if we have a supportive market to do something like this, because, the same thing happened to us back here at the end of 21. If we have a supported market, I would say probably would take the better part of a year to tack on 800 points. But, everything looks really good right now, energy-wise, trend-wise, and all that stuff. And in fact, all markets really look pretty damn good right now across the board, like just the S&P. Look at the energies here. I mean, weekly energy looks good. Daily energy looks good. So we have a market technically that has no impediments in front of it. I think really the only thing that's impeding this market may be just the news cycle right now, just the amount of uncertainty. And so Dave was bringing up the NASDAQ before. The NASDAQ is also in good position technically to keep running. And we have had a new high that came in over here, although this move isn't quite up to there yet. And the Dow also looks pretty good, although the energy sector, Dow's into all-time new highs. So the Dow and the Russell have been the strongest. And the Dow right now is into exhaustion on the daily chart. So this move may kind of settle down for a little while. But you can see just today, the NASDAQ is the one that's sort of like the anchor into things. And here's our intraday chart. This is the typical pattern. We gapped way higher this morning, and then they sold straight into that, right at all-time highs. So once it touched all-time highs, it was kind of like a third rail, and we went straight.
All the sell orders were set up.
Yeah, straight down from there. So it's I'm waiting to see. This is a very common pattern that we've seen for the last several weeks. Is like gaps higher, we sell it off, and then by the closing bell, we actually have retaken most of the lost ground. So Dave, I'm gonna bring up your favorite chart here on a single time frame. This is the S&P. So this is what Dave was saying, like the price came down to the middle moving average of the Bollinger Bands, which is
right on it.
A 20-period simple moving average, and very common to be used. We're starting to see positive momentum coming on the MACD. For those of you that are MACDers, we're seeing an upside cross here on the stochastics. Honestly, I don't use MACD and stochastics anymore. I learned about them 20 years ago, then promptly ditched them. But I have been using the Bollinger Bands along the way. They usually show when things have gone too far, too fast. And we do see support coming along in there. Let's throw this on the Russell, and we'll get your analysis on the Russell there.
Did the same thing pretty much.
Yeah, right down to the 20-period moving average, and the momentum has already gone positive.
Oh yeah, it's cranking. Now its daily energy is getting to exhaustion. So that's why I said it may just be front running the rest of the market by a week or two at this point, because its energy, it's not quite there yet, but it's down in the 30s. It's not up in the 50s and stuff like the rest of the the S&P and everything is. So it seems like it's led the way. Don't be surprised to see it now that it's put in kind of that new high to have a pullback day, right? And it doesn't have to be much. 25 points or so, right, to kind of cement that and then off to the races again. That's how the Russell kind of works when it starts doing these moves like this. In fact, if you look at that chart, you can see it have these big breakouts and then it'll give it back, and these big breakouts and then kind of give it back. And then, but it grinds higher over time. And that's what tells me we've broken out of a multi-year sideways pattern on this thing, especially on the weekly chart. Look at that you're on the monthly chart. Look at that sideways pattern for 2 years, right? And we've really finally broken out of it now. So it's definitely finally trending again.
What I was going to ask here is that when is the last time? I'm just going to go out to
that's it. There's the big breakout, the last one.
Single chart, and I'm going to go out to the Russell. And the question on the table here is, let's go back even further than that. Let's go back. Maximum available. When was the last time that the Russell actually led the market? When was the last time that the Russell actually led the market? It might have been in 2013. 2013 looked pretty good here. The rest of the market was going higher at that time. And then here's actually 2016 might be
Right after the
That's
last Trump election, yeah.
no,
But the whole market
that's
was like that during that time.
no, but what my point here is that 2016 was actually very, very sideways to negative until the election, and then it ripped. So
Right.
the Russell was actually leading things higher into that election, believe it or not.
Hmm.
And then of course, we got a huge move, but everything moved in a huge manner back here in late 20 and early 21. And then the Russell's just been dead since that point, and I think a lot of that's been due to rates.
Yeah, so we just finally hit a new high, like today.
Oh yeah,
You know,
yeah.
from
That's the
3 years ago or 2 years ago.
Yeah, so we hit at the very end of 21, we had hit an all-time new high, and that was actually a throwover. That was a false move that
Hmm.
was engineered by those that hold millions of shares at a time. Decided to push this thing higher to get retail to chase this thing from a breakout, and then they sold into that. So to me, that was a 100% engineered move.
Hmm.
Worst example of it I've seen. Hey guys, if there's we got quite a few people online here today. If there's any questions that you guys want to bring up, or
Well, and that's
any
why I
assets
say,
you want us to look at.
yeah, keep watching this, Russell, but expect a pullback a little bit. Let's say, don't be surprised if the Russell has like one crazy distribution day, down. It's just a big move down. Even the rest of the market's up and the Russell's down 30, 40 points, right? Like that would not be surprising here. That's a great time to sell into that. That's what you and I were talking about that last week, is on that pullback, whenever it is, selling, even right at the money on that thing. So that's a go in. The SPX, I think, is going to continue to grind higher. The NASDAQ, I think, is just, it looks like rotations coming out of there into the Russell, into the Dow. And so the NASDAQ may be really good for iron condors over the next 6 to 8 weeks, where it just kind of goes like this. Still kind of going higher, but it doesn't have the momentum that it's traditionally had. You see this, right? Doc, when towards the later stage of a bull, and before you get the parabolic move, the leaders, the NVDAs, and those start to wane some, and you start to see it broaden out, and then you get that kind of parabolic tail before you get the next major correction, right? And that's seems like how this is shaping up.
Yeah, in fact, let's take a minute here and look at the Mag 7 one by one, and let's see what's working. And actually, if I remember it, what I'm going to do is I'm going to bring up the different S&P sectors. So
Yeah.
this is Apple, and Apple's showing an ascending triangle pattern. So this one still looks good, and it looks like a measured move is going to be about 35 points or so. So I think this is going to take this up to about 270 if and when it decides to break out. So that's Apple. Amazon would be our next one in the Mag 7. A little bit of a false breakout, and that's a concern. Now, it's still showing higher highs and higher lows from here, but I don't like what happened here. I don't know what the issue was a week ago with that, but something to keep your eyes on. So right now it's still heading higher. Let's see, our next one, Meta. That's a nice looking little bull flag, and it's holding the swing test at 550. Google, keep your eyes peeled on this one, because this is a lower high, and they may feel, the market may feel that Trump is anti-Google, and there may be something.
It's not even Trump. The current Department of Justice is trying to break it up. They want them to sell off the search, which that basically is Google. So from a stock standpoint, so I don't know how that'll pan out, but that's the at least what's being said on the street, is they want them to sell off the search.
This is what I would expect to see. So this, Dave, to your point, I think this plays out nicely. Google may just pen it for quite some time here, and so Google may be a really good candidate for that pennant, because that's where it looks like right now. Microsoft, I looked at this morning, also kind of looks like the same thing. It's running into a pennant. It just can't get out of its own way. Now, be cautious of this when it finally winds up, because that's usually when we, see this thing bust a move one way or the other. And let's see, NVIDIA. It doesn't look horrible. It's not quite has the same velocity that it used to. It's getting these great earnings, but it's just not like we're just not seeing the explosive moves. And then we're going to finish out with Tesla here.
Well, we have one more to finish out after you do that, though.
Okay. So Tesla actually looks like it's breaking out of a long-term.
Tesla is a Trump trade.
Right.
Guys.
Okay. So what do you want to look at?
MSTR.
Okay. MicroStrategy. So this one I feel that this one's definitely gotten ahead of Bitcoin itself. So the underlying for this has got to be Bitcoin, because they're using every form of revenue that they can create to go purchase Bitcoin and put it on their ledger. And so when it runs ahead of I don't know what their big advantage of is anymore after the ETFs have come out. I mean, a year ago, you really couldn't buy much of anything that correlated to Bitcoin. You could buy BTC, but it was terrible. So now I think this one has kind of gotten ahead of itself, and the implied volatility is unbelievable.
Oh, you can sell like I'm doing weekly options on 2x of this, like MSTX and MSTU.
Look at this. If you're willing to buy at $200 a share,
you've got to hedge it. But my gosh, what it's paying on things is incredible.
So here's an example of something. So I would consider, and this is something I was bringing up in my trading room the other day. I was like, $200 is support right now, because former resistance becomes new support, no matter what. And so if you were to sell, the most possible conservative trade that you could do for this is to go out to January and sell the $200 put. So for if you just do one contract, you're going to get $1,000 of credit on $20,000 in margin.
Yep.
Which is, let me make sure my math is correct here, but
about a 5% return.
Yep, exactly. There we go. So not bad for not doing anything, just a 5% return for basically saying, yeah, I'd buy at 200.
You want to have some real fun? Pull up MSTX.
And is this the leverage version?
Yep.
Yeah, see, these I don't mess with. I don't touch
They are insane.
I don't touch these things.
Keep it on the January cycle. Look at the like the 50. So it costs a lot less, but it moves like 30 points a day, up or down, right? So, but if you look at the options, what they're paying on this, I mean, look at the 50. You'll make your $1,000 on a 50.
Yeah. So
it's crazy.
So guys,
you got to hedge it though.
Right.
This thing can go to zero.
Guys, what I would say is be very cautious of this. Don't let us talk you into doing these trades, because if you look at the volume and open interest on these things, it's
lower for sure. These are newer, right? And so that's the problem with volume and open interest. If it doesn't have that, it's harder to get out. If you have to get out, you have to hedge it. That's the only way to do it. And by hedging it means that you basically say, all right, if I'm going to sell the 50, right, and I'm going to get $1,000 for it, I'm going to lock myself into, like, I'll buy the 40 for $5.50 and basically buy that at my break even for a hedge if it drops to 40. Because if it drops to 40, then, you've locked in your $1,000 effectively, but that $5.40 will go to, whatever it is. $10 or whatever, and you can sell out it and get out of everything and still kind of break even on it, not really lose on it. If you don't hedge, this thing can go to zero. So that's your thing on it. It's definitely not like a normal stock. Even MicroStrategy though has some craziness in it like that. You have to hedge it, but it's options wonderland for those that really know what they're doing right now.
Yeah, I just quite honestly, guys, I've done trades like this before, and I've not been able to get out. I've been profitable on a trade, but there's so little open interest on there that the market makers can do whatever they want to with it, and they force you to basically, they set some ridiculous bid-ask spread, and they force you to pay up to get out. And I won't do these anymore. I will only play things that have a decent amount of volume and open interest. So if you look at MicroStrategies, if we compare the same thing, and if we go up to say 200, which is equivalent, and if we look at this, we see not only is the spread tight, it's within 30 cents. It's not bad, but we've got 9,200 other contracts, which means that there's competition. And that means that the market maker doesn't have to get involved. They can just let the market itself set the bid and ask price. But if you want to make the market maker be the only other participant in the market, they are going to screw you with every fiber in their body. So stay away from things that are very, very light with open interest. Okay. Any other questions, guys? We just got a couple of minutes left here, so this is not for the faint of heart. So
yeah, it's not for the faint of heart. You have to know what you're doing. Let's take a look at let's just show what's happening with the VIX real quick in the midst of all this.
Let's see if I can spell here. Oh, come on. There we go. The VIX is, I mean, even though, the VIX just continues to plummet. So it does have a higher floor than this summer. This summer is truly when we had what I would consider to be, this was truly complacency that we had into middle of July. And things have been different since then. So we do have a higher floor for what I would consider to be uncertainty right now, especially with the number of global events that are happening, with the political election. Really, none of that has simmered down. It's slowed down just a little bit. And I saw a ceasefire between Israel and Hezbollah this morning. I think that helps. Those kind of things. Certainly seeing a cessation of activities in Ukraine would slow things down as well, too. Where, Putin's not launching telephone pole-sized projectiles into the air, that's certainly going to help things. But right now we still have this. My analogy for this, when this came along, this is like you're walking along out in the path and you come along this perfectly placid pond, and there's not a ripple in the pond at all. There's no wind, and you take a boulder and you just plop it straight in the middle of that thing. There's going to be waves going back and forth for the next hour, and this is exactly what we're still dealing with this. And until that comes completely out of the market, we may get down into a more complacent, and this is where we had the market just kind of grinding away. And that's where you have to be very, very cautious when you have those low values like that. Okay, Dave, is there anything else you wanted to bring up?
I think that's it. I think it was important to show kind of that difference of where things are. That little bit of extra volatility is good, better for selling options now. And we still have some of that implied in there, right? Yeah. Outside of the MSTRs of the world and stuff like that. But I think overall, guys, I think what we're saying is we've got a fairly clear pathway to grind higher and go higher through the end of the year. The charts are showing that looks like the release, the energies are there for it. And the thing that I think, makes us kind of just look over our shoulder a little bit is that there's no wall of worry, it seems, in the market, right? It's not everybody's worried. It's more like everybody's expecting it. And so a lot of times the market will do the opposite of what everybody expects, but it also sometimes just do what you expect it to do. Like, you know what I mean? And so right now I think we're kind of in one of those times. So unless there's some piece of news that's really jarring, right? So like PCE would have to really be a lot higher, right, than estimates to really jar the markets and everything. If it comes in line, which it's kind of been doing, I don't think it moves the markets. I think the Fed continues the course, and there's a 50-some% chance right now that they'll reduce rates. But even if they don't reduce rates at the next meeting, I don't know if that really stops things for now, right? With where we're at. So only if they start raising again is when that would really be a probably send markets into a tizzy. But
right. Yeah. If Powell comes out in 3 weeks and says, sorry to disappoint you guys, but we're not going to cut. We are going to pause. However, here's why, and we're going to just take our time with things like that. We still intend to, if the data supports it. So it depends on how well he explains it.
Yeah.
But I agree with you. I don't think the market's going to necessarily sell off just because they don't cut. That expectation was set 2 weeks ago or 3 weeks ago.
And the market already had its freak out from it. And,
it's already had its tizzy, so I think that's fine.
Yeah. Cool.
All right, guys.
Well, that's it, guys.
Yeah.
Thanks for tuning in, and send us any questions you have, obviously through the channel or to us at support at 12minutetrading.com. But thanks for joining us, and we will be here next week. So we'll be here on Monday. Then I'm going to be out for a little bit. Doc will be going solo, but we'll talk a little bit more about that next week.
Okay. Thanks, everybody. Have a great Thanksgiving. Bye now.